How's it going? Ryan here. Today we're going to look over two trades I took on SPY. I took the same trade twice. One time ended up being a small loser. The other time ended up being a bigger winner, which resulted on me being green for the day. Before we jump into the trade specifically though, here we are on the daily time frame looking at SPY. We'll go into some of these levels, some of the things that I was thinking of, why I did what I did. So from the top, we got 444. That was a huge area of resistance, acted as support, then we broke below it. Resistance once again, that's kind of to the high side. We have this area here, 437.5 from the daily chart, area of pretty big resistance. Once we broke out of it, we found support. We have 434.5. Similar reason, we have support multiple days, broke below it, resistance multiple days, broke above it, support it once again. We have this 432 pretty much on the dot. It was a big point of resistance here and then acted as support after we pulled back after that rally up. Then we have this range that we traded in for 4 days before breaking out, which is 430 or 429.5 and 425.8. So just marked some relevant levels based on where we were. And then we have, I'll dive into a lower time frame here. We have the high of day from yesterday's trading session, along with this supply zone that accompanies it. We have the low of day, this red line here. Yellow is the high of the pre-market. Yellow line down here is the low of the pre-market. And then this line here was a level that was marked intraday, and that was just the most recent high that we had set. Without further ado though, when we were coming into the day, we've been in a downtrend. We had broken below yesterday's range, and we were opening quite far below yesterday's range, about $2 or so below it. I was looking for continuation of weakness. Well, what I was looking for is if we would break this low of day. I thought that the most reasonable area we'd find major support would be this 432. It didn't work out that way. So initially I thought maybe we'd break below the pre-market low, retest, and then find support at this level before recovering. But what I did happen to take was a trade pretty close off the open. So we opened up right at the pre-market low, failed to push below it, pushed up into this area here. This was the 434.5 level from the daily chart. Also have found some local resistance in the pre-market at that level as well. When I saw this candle push up, tap it pretty much exactly, and then push down, fail to break and close above it, I felt that that was a valid area of resistance. On the following candle, we pushed up and touched that area. I took a 434 put for Monday's expiration at the retest of this area. We bounced around for a while. I held all the way until this candle is what stopped me out. So we had opened up right below the level. We'd pushed down. We failed to break the low that we had set on the previous candle, almost formed like a double bottom, essentially where we bounced off the same exact area, pushed up, and once we pushed up into this zone and showed strength, I got out for a $14 loss. That's on a single contract. I think the contract itself, I can't remember the exact price at which I got it, but I do remember $14 loss on that. So what was I looking for? I was looking for a rejection. I wanted to at least target this most recent swing low or the pre-market low. We started pushing down. Volume was really low and the price action wasn't accompanying it either. It was kind of concerning for me, but I did not get out of the trade prematurely. I decided to either let it hit my stop loss or hit a target. That was something that I wanted to get better at, as a couple times prior this week I had gotten out of a trade too early that did end up working out and hitting my target. So point of emphasis on me was not to preemptively get out of this trade, which I did not. It was a losing trade, but I'm not mad at it. I saw this area, an area of interest. We failed to break above it. Took a retest of that area when we've been showing some weakness in the market. Yeah, don't feel bad about that trade, but I did get stopped out. From there, we went up and made this high that I marked with this yellow line. But upon making that high, that's on the lowest volume candle that we'd printed all morning yet, and got pushed down. So that didn't seem too convincing in terms of going long after breaking out of this little range. Subsequently, we sold back down. Once again, couldn't break this level here. Pushed below it, but found support. And then we did some kind of wonky price action here where we had these really long bottom wicks, really small candle bodies, almost as if we wanted to push up, but kind of had an inability to. So these were not looking good to the downside, but not really looking great to the upside either, especially falling volume in this area too. Had low volume corresponding with some of these. This candle finally got a rise in volume as we pushed down all the way close to the pre-market low before pushing back up. But then we approached this level again, once again on low volume, failed to break above it, hit that level, pushed down below, and I re-entered pretty much the exact same trade that I had taken earlier. I re-entered 434 puts for Monday's expiration on the beginning of this candle. My target was this area in here, or sorry, no, it was 434 was my target. It was a whole number. It was an area that we kind of had failed to close below. We'd bounced from there a few times. I wasn't interested in holding this super long because of the price action that we'd been having, kind of the inability to break low and continue down. But I figured we'd get at least a partial reject off this area, as we had been wicking down at least. So I took the chance. I took a trade here, same trade that I tried to take here that didn't work out. I sold at 434 on the dot when we hit it. We pushed a little bit lower, but I stuck to my plan, got out. Ended up, that was about a $20 trade. So up on the day about $5. Not a big day for me, but a day where I allowed risk management to keep my losers smaller than my winner, even though my winner was a really quick scalp that was over in a couple of minutes. Overall on the day, we trended up. You can see how price reacted to some of these levels. So we did come up, reclaim this level, find support, push up, broke above the recent high, found support at that recent high, came up, retested yesterday's low of day, found support again at that recent high, broke above yesterday's low of day, found support there, couldn't make a higher high, sold back down. And yeah, just kind of ended up hitting pretty much all the targets that I had in the local area, between the pre-market high and then eventually that 437.5 that was from the daily chart was pretty much the high of day. So overall, things got better later in the day. I got off after this candle. I took my profit and logged off and got to work. But if you stuck around, there was actually a lot better trades to take as we started to trend up, and you could catch pullbacks on these higher lows. So with that said, I am proud to say I didn't feel like I made any mistakes today. In the time frame that I traded, not a lot of great opportunities were there to trade, so I had to make do with what I had. I stuck to my rule, cut my loser. That it did run up, so it would have been way worse if I tried to hold that. And then I wasn't scared of taking the same trade again because I still thought it was valid and ended up working out. So overall, that's a win for me. Not a win in the profit department, but a win nonetheless. So as always, thank you for being here. I appreciate you. I trade live every Monday through Friday. If you feel so inclined, come by, stop by, say hello, and that is it. I hope you have a great weekend. All right, peace.